Pyth has been one of the most talked about Oracle projects in the crypto space, and right now its price action is setting up for a potentially massive move. After pulling back into the golden retracement zone around 15 cents to 18 cents, Pyth is showing signs of support, with Elliott Wave projections pointing to targets as high as 35 cents in the coming weeks. In this video, we'll dive deep into the technical setup, on-chain fundamentals, tokenomics, and the macro factors driving this altcoin, and explore both the short-term bull run potential and the 5-year long-term investment case for Pyth Network. Price actions and prediction. After peaking near 27 to 28 cents, Wave A, Pyth entered a pullback phase, now consolidating in the highlighted golden zone, the retracement box. This zone spans roughly between 15 cents and 18 cents, which corresponds to the Fibonacci retracement levels typically associated with Wave B corrections. Currently, price is trading around $0.167, showing early signs of support within this retracement zone. If buyers maintain control here, this will validate the setup for a Wave C, advance targeting higher resistance level. The upside projections visible on your chart suggest possible extensions toward 35 cents in the next impulsive cycle. However, a decisive breakdown below 15 cents would invalidate the bullish short-term setup and open risk toward deeper support, closer to the 13 cents region, marked by the red horizontal line. Tokenomics and fundamentals. On-chain metrics for Pyth are modestly transparent, but what we can observe is that the network delivers ultra-low latency price feeds across more than 40 blockchains, supporting over 350 distinct feeds spanning crypto, equities, ETFs, FX, and commodities. While data on daily active addresses, transaction volumes, and staking rates is limited, the project's core value lies in its role as a high-fidelity data oracle for DeFi and TradFi alike. Regarding tokenomics, Pyth was issued with a fixed total supply of 10 billion Pyth, of which roughly 5.75 billion tokens, 57%, are currently circulating, with the rest subject to staggered vesting schedules. This creates a tangible dilution risk over time, though vesting appears structured and transparent. Valuation-wise, Pyth's current market cap stands near $960 million, while the fully diluted valuation, FDV, approaches $1.7 billion. Direct peer valuation comparisons are difficult due to Pyth's niche as a high-frequency oracle, but potential peers could include API3 or other oracle providers. Data on insider or institutional flows is limited, though recent on-chain snapshots suggest significant whale accumulation and exchange outflows, signaling potential bullish sentiment among large holders. Sector and macro view. The oracle sector is increasingly critical, especially as DeFi, RWAs, and TradFi on-chain integrations demand reliable, real-time data feeds. Pyth's high-speed, financial-grade data feeds position it as a leader in this niche. On the macro front, easing Fed policy, increasing liquidity, and bullish crypto cycles create conducive conditions for risk assets, including infrastructure tokens like Pyth. Regulatory clarity, especially via U.S. government partnerships, also boosts legitimacy. Pyth's competitive positioning stands out. It delivers institutional quality market data via a decentralized Oracle framework, backed by legacy trading firms like Jane Street and Wintermute. Its cross-chain feed support and governance token adds structural depth, differentiating it from simpler oracles like API3, though dilution remains a key hurdle and point of attention. Catalyst. In the short term, the rollout of U.S. Department of Commerce economic data, technical breakout beyond $0.265 Fibonacci resistance, and whale accumulation patterns serve as immediate catalysts toward a 30 cents target. Over the long term, institutional adoption via public infrastructure integration, ecosystem growth in cross-chain DeFi, and future product launches or governance upgrades are key levers. Investor demand must outpace token unlocks, vesting cliffs, to maintain upward price momentum. Bullish or bearish? Firstly, Pyth's institutional validation has been elevated by its partnership with the U.S. Department of Commerce to deliver on-chain economic data like GDP, positioning Pyth as a trustworthy infrastructure provider bridging TradFi and DeFi. Secondly, the token exhibits healthy on-chain accumulation from whales and noticeable exchange outflows, which historically precede significant price moves. Thirdly, technical indicators, such as a super trend by signal and key Fibonacci levels at $0.265 to $0.366, suggests strong momentum that could propel PYTH toward a 30-cents target in the near term. Risks or counterarguments. The most pressing structural risk is token dilution due to the large portion of locked supply that will be unlocked over the coming years, which may pressure price if not matched by demand. Final verdict. Bullish stance. The convergence of institutional adoption, strong on-chain accumulation, and technical catalysts supports a balanced but optimistic outlook. However, dilution risk and underlying infrastructure vulnerabilities temper the outlook, so it's optimistic with caution. Concluding this, Pyth Network is positioned at the intersection of DeFi growth and institutional adoption, with its high-frequency Oracle solutions already attracting real-world integrations. The short-term price action shows bullish potential toward the 30-cent zone, while the long-term roadmap and tokenomics highlight strong upside over the next 5 years. Of course, risks like token unlocks and competition remain, but the overall thesis stays bullish. If you found this breakdown useful, make sure to like, subscribe, and hit the notification bell so you don't miss our next deep dive into the most promising crypto assets of this bull cycle.